Good morning, everyone. This is Japanese Economic Review Channel. Today, we review the historic session of March 11, 2026. Yesterday was a landmark day as the Nikkei 225 breached the 55,000 yen threshold, driven by a powerful surge in tech momentum. While global macro caution remains, the resilience of the Japanese market, particularly in the semiconductor and AI sectors, has set a new psychological floor for investors. Let's examine the drivers behind this 776 yen rally. The numbers speak for themselves. The Nikkei closed at 55,025 Japanese yen, a 1.43% gain. This wasn't just a narrow rally. Over 1,000 stocks on the prime market advanced. Market liquidity was exceptional, with trading value reaching 7.29 trillion Japanese yen. This massive rebound, led by global tech buying, managed to overpower significant pullbacks in the financial sector, signaling a clear shift in investor preference toward growth over value for the day. Looking at the global context, the U.S. market provided a mixed but supportive lead. While the Nasdaq saw a slight three-day decline, we observed persistent accumulation in AI leaders like Microsoft and ARM. A strong 5-year Treasury auction eased immediate yield fears. However, the broader market remains range-bound as investors brace for the upcoming U.S. CPI data. This macro headwind tempered aggressive buying, but didn't stop the AI-driven narrative from crossing the Pacific. Intraday movements reveal a tug-of-war between euphoria and caution. We saw a morning euphoria peak at 10:58 a.m., with the Nikkei up nearly 1,500 yen. However, gains were dialed back as institutional investors positioned themselves for the Friday SQ calculation and anticipated shifts in BOJ policy. The afternoon profit-taking ahead of US CPI suggests that while the long-term trend is bullish, short-term volatility is being actively managed by professionals. Sector rotation was distinct. We saw aggressive capital rotation into hard tech, logistics, and utilities. Non-ferrous metals and marine transport were top performers, benefiting from global demand recovery. Conversely, the banking and insurance sectors faced heavy profit-taking. This divergence is critical. It suggests that investors are moving away from the interest rate play and doubling down on companies with structural growth tied to the digital economy. The Growth Market 250 Index also maintained its upward trajectory, hitting a new year-to-date high. Fresh capital is flooding into recent IPOs like Timee and Synspective. The surge in names like QD Laser and Brains Technology highlights an unrelenting appetite for AI and deep tech stories. This vanguard segment is serving as a high beta indicator of retail and venture-scale confidence in the Japanese tech ecosystem. Beyond the macro, specific corporate strategies are creating micro-catalysts. ZOZO is leading the way by integrating OpenAI's ChatGPT for fashion coordination, while IIJ is expanding its cyber intelligence services. In mobility, Suzuki and Yamaha are accelerating their EV and scooter lineups. Even consumer staples like Calbee and Fujiya are showing agility with pricing overhauls in response to inflation. These aren't just stocks, they are businesses evolving in real time. To conclude, we are navigating a dual-engine market. On one side, we have microeconomic euphoria driven by AI and semiconductor demand. On the other, macroeconomic caution regarding the BOJ's policy normalization and U.S. inflation. Currently, the structural tech supercycle is powerful enough to absorb central bank anxiety. As we head into today's session, the focus will be whether this tech resilience can withstand the imminent SQ and CPI data points. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.